Now, if they did that, you could say, well, the market might crash. Well, I think the market crashed. So what are we waiting for here? Risk assets right now are the war, foreign relations and the war in Ukraine and the Russian foreign policy and the monetary policy. And this is the first time where we've had the potential to monetize a digital scarcity, which is what Bitcoin is. So it's still too early to say that that's a mainstream thing. It was not an institutional grade asset at all at the beginning of 2020. MicroStrategy was the first public company to make any material commitment to it. That's August 10th, 2020. But if I make a list of all the things that cause Bitcoin to trade down, right? If I make a list of the parade of horribles, right? Let me name my pain. and they're all going to reasonably reverse in the next decade. But here's what they are. One, wash trading. You can wash trade crypto and you can wash trade Bitcoin, and there are no wash trading rules. This is volatility inducing. This is not good, because it means that if you trade down 10%, you're probably going to trade down another 10%. So the unregulated crypto exchanges are liability number two. The third is the crypto tokens, 19,000 unregistered securities. There, you might be able to find 6 things or 12 things out of 19,000 that can make a straightforward legal argument as being without an issuer and therefore a commodity. But what you have is a $400 billion cloud of opaque, unregistered securities trading without full and fair disclosure, right? And they're all cross-collateralized with Bitcoin. If you look at ETH and you look at all the other crypto tokens, they tend to trade with a high correlation to Bitcoin, because on Saturday afternoon, you're pledging Bitcoin as collateral against your Solana margin loan as it crashes, and you're getting a margin call. So I think the story was like, and that takes me into my number 4 point, crypto hedge funds, or what we'll call the wildcat banks. Luna was one, but Celsius, and there's a whole list, right? Then the 5th liability is ignorance. Just a lot of people, they go, every time someone criticizes crypto, I go, well, if you use crypto and Bitcoin interchangeably, that means you don't know what crypto is, and that means you don't know what Bitcoin is either, right? So it's a meaningless phrase. Like Bitcoin is exactly the diametrically opposed opposite of just about everything else in the crypto space. Right, the fact that they're actually conjoined is one of nature's great ironies. And the lack of regulation has allowed all of the wildcat crypto hedge funds to have a meaningful impact on the price of Bitcoin. Right, and if they actually regulate them and they take out those crypto hedge funds so that they can, and the crypto exchanges, so they can't exercise undue influence over the price of Bitcoin, it would do a lot of things. It would immediately decrease the volatility. The closest thing to a stable coin is maybe Circle or the Paxos offerings, right? Because there's some clarity. But, if the SEC said, okay, you have to file your assets at the end of every day, like that's what they do with an ETF or an ETP, right? There was a point when there was like $18 billion of UST, quote unquote, stablecoin holding, and that went from 18 billion to 0. Right. So if we have a reliable, regulated stablecoin, that would be good for the industry. That would decrease volatility. That would increase credibility. The lack of a spot ETF anointed by the SEC is another example, because if I don't have a spot ETF, then I have to ask the question, what's the real cost, and how credible is the futures-based ETF? If we eliminated the gold spot ETF and we didn't have it, it wouldn't be good for the gold price either. It wouldn't be good for the asset class. Then you've got the agencies, FASB, FDIC, SEC, CFTC, right? Clear guidance. FDIC doesn't let banks hold Bitcoin. FASB gives you prejudicial accounting. SEC hasn't clarified they don't need to clarify what's a security. They need to clarify what's a commodity. The SEC ought to actually say, these are the 4 cryptos that we deem as commodities and don't come under SEC rulings. Everything else is a security. Now, if they did that, you could say, well, the market might crash. Well, I think the market crashed. So what are we waiting for here? A lot of people that are bears, say, well, there's no clear use cases for Bitcoin. And the clear use cases are going to be on the Lightning Network, on the layer 2 and the layer 3. And so as Block and Square and Cash App and PayPal roll out better offerings, and as all the companies, like my company's working on Lightning offering, as other companies roll out Lightning-based offerings, then people are going to say, okay, well, this is the base layer, but there's layer 2, layer 3 ecosystem. And they're going to get very comfortable that this is high velocity money, right? Why is Bitcoin the best money in the history of the world? Well, first of all, because you can't make any more of it, and you can print a lot more gold and a lot more paper. But second of all, because it's money at all frequencies. It's money you can reasonably hold 100 years without trading, but it's also money that you can reasonably hold for 100 milliseconds before you trade it, right? And if people start to see that I can move this money 100 times a second for no cost, and you can do that on a layer 2 or layer 3, and you can't do that with the Visa network, and you can't do that with gold. Right. So when people see that it's high frequency programmable money, and it's also low frequency store of value money, and it's better than Visa at moving money fast, and it's better than gold at holding money a long time. When they see that, then light bulb goes off and they go, wow, this is a better way to store money. And then of course, why would I hold a big bond fund yielding 3% for 30 years? Right? I mean, you're not giving that money to your grandchildren, generating 3% yield right now. It's just not going to happen. What we're waiting for is for the industry to grow up, right? And there's going to be winners and losers. The winners are going to be public companies, big regulated banks, regulated institutions, public investors, and the general public, and the adopters of Bitcoin. The losers are going to be the offshore entrepreneurs, the wildcatters, the crypto bros that launched, SHIB coin, the 4th, yo-yo coin 16. The only debate is it a 99% failure rate or a 99.9% failure rate?